Okay, family, welcome back to another video. My name is Gregory Falcon. I'm based in Charlotte, North Carolina. A lot of you guys know if it's your first time tuning in, I'm involved in the real estate business, the dump truck business. I invest in the stock market and cryptocurrency. But today I want to talk to you about 3 retirement accounts you need to have. As we all know, pensions is almost dead for our generation. I'm 53 years old. So if you're self-employed, entrepreneur, doing your own thing, you have to think about retirement. And then someday and sometime you're not going to be able to do what you're doing now. And you don't have a pension, no retirement plan, Social Security is not going to be enough. So I have 3 retirement plans that I invest in. They will pay off in the long run that I think everybody should at least consider or take a look at and see if it pays any interest to you as you go down the journey of being self-employed. A lot of us just make enough money to pay the bills and make a living, but we always forget to do our part and invest in our future, because the younger you are going to think back later on that you should have did better when you become older. So the younger you have to look out for the older you later on in life. So the 3 accounts that I really want to go over that I personally have and I think you should recommend, again, this is not financial advice. You need to do your own homework. I'm gonna touch briefly on each account and how I use it in my life and in my business to help prepare for my retirement. Like I said, I'm 53 years old. I'm only planning on working maybe 6 more years to 59 and a half when I can really take my my retirement and live off my retirement and my investments and just kind of fade off to just doing this full time as a content creator, YouTube, giving out advice, doing coaching is what I really plan on doing. So the first account, if you haven't heard of, is called an HSA, which is a health savings account. It started out in 2004 to help people pay their medical bills. So you have to have a high deductible insurance plan to qualify for it and be self-employed and no other insurance. You don't have any other insurance at the current time. So there's a lot of companies that offer HSA. I personally have my HSA through Fidelity, which I use my money to invest. And right now in 2024, you can put up to, 2024, you can put up to your single person, $4,150. If you're married, you can do up to $8,300. Now, the beauty of this account is it's a triple tax advantage. And like I say, do your homework on this. It reduces your income about the amount of the money that you put into the plan. It also grows tax-free, so I recommend investing it. Again, like I said before, if you haven't done any investments, start out simple with the S&P 500, do some research, and just see. Again, the S&P 500 over the last 30 years has returned on average roughly 10% return. You can't get that in the bank. You can't get it anywhere else. So if you do that in HSA, like I say, you get a pre-tax break when you file your taxes. It grows tax-free. And then for any medical expenses, you can pull the money out and pay medical expenses. I recommend how I do it. I don't pay any medical expenses out of my HSA. I take all of my money and I pay it out of my pocket, and I keep all my HSA receipts for later on in life when I want to go get the money and it's going to be tax-free. So you got to keep good records, and I put all my receipts every year into a cloud. I label them what year. So when the IRS come to get ready to do withdrawals, I have all my receipts from that year, and then you can take it anytime you want. 5 years, 10 years, whenever you want, you can take it. And also, again, the contribution is $4,150 and $8,300 for a family. But once you get to 55 years old, they have an extra $1,000 that you can do a catch-up contribution. So I think everybody that's self-employed should at least look into this program. And trust me, most people that do have an HSA, they say 96% of the people normally take the money out every year and pay all their medical bills instead of investing it in the stock market or whatever you want to invest it in to have it grow and make more money for you. So I think that's one account everybody should consider. The second account will be the Roth. Okay, the Roth account is another one that I have that I do. And it has income limitations. So the Roth in 2024, your income cannot be over $146,000 roughly for a single person, $230,000 for a married couple. You can contribute $7,000 a year. If you're over 50, you can do a catch-up contribution of $8,000. And In 2025, you're between 60 and 63, you can contribute up to $10,000. So there's a lot of benefits that we need to look into. A Roth account, plus it grows tax-free. You don't get a tax break putting your money into the account, but the way I look at it, I'm a true believer that today's tax rate is going to be a lot lower than the tax rate 6, 10, 15 years from now. Again, I have 6 years to go before I'm 59 and a half and I can get my money. So don't make the classic mistake. Open up a Roth, put your money in it, and don't invest it. Again, like I said before, look at the S&P 500, look at different options, the total stock market, but please invest your money. It's something. And again, it grows tax-free. It's 59 and a half. You can get the money, and then you don't have to pay any taxes on the growth, the money you put in the account, or anything of that nature. So most people that I know, and I use it for a savings account, because any of your contribution, you can always go back and take your contribution out if you need it for an emergency or anything of that nature. But what you can't take out is the gains that the money has made. So any amount you put in, you can't take back out if you need it. I wouldn't recommend it because, again, the stock market has been doing fantastic over the last 30 years. Has its ups and downs, but overall, you're going to make more money by leaving your money in there and see if you just can't hold tight until you're 59. I tell everybody, avoid the lifestyle creep, because once you start making money as an entrepreneur, you're going to start wanting to buy more things and increase your lifestyle. Please don't increase your lifestyle. What I do is I fund all my retirement accounts first, max everything out, and then the money I have left over, that's my fund money, and that's what I increase my lifestyle, and that's vacation money of anything you want to spend it on. But you got to make sure that you invest and take care of yourself first by maxing out all your investments if you can, and then the money you got left over, then go on vacation, and then travel and do the other things you want to do. You got to make some type of sacrifice to make sure you're okay later on in life. Okay, and the third account that I use personally is a solo 401k. Again, this is a wonderful account. Now that the Secure Act 2.0 is out, you can make a lot of different changes, a lot of different contributions. So right now for 2024, the contribution is $23,000. If you're over 50, you can do $30,500, and that's the employee side. So the employee side, you can contribute up to 100% of your compensation. So everybody know me in the real estate business. I'm also in the trucking business. So the solo 401k, you can't have any employees. It can only be you and your spouse. I own a real estate company. I don't have any employees. Everybody's contract help. So I'm the only person involved in the real estate company. So every year, my first $30,500 that I make from real estate, I put into my solo 401k for investing in part of my retirement account. And then I live off my trucking money, which is a simple way to do it. But then if you're really making any decent money, you could also put in a total of $69,000. But if you're over 50, you can put in $76,500. And I know that's a lot of money, but if you're an entrepreneur, you have a great year, look at investing more money. Like I said before, we don't have pension plans. We have to take care of ourselves. We have to set up our own retirement. So you want to be mindful of that. But you got to make sure you make enough money to max out the account at the $76,500. It all depends on your structure as an LLC, S Corp, C Corp. It's either going to be 20 to 25% of your gross income you can put in. The max is $76,500 is what you really want to put in there if you can afford to put it all in there. And again, you want to invest the money. So the beauty of the new Secure Act 2.0, again, everybody do your own research, look this up. But Secure Act went into effect December 29th, 2022, started to make the changes in 2023 and then 2024. What I like most about it is that not only can I put the $30,500 as the employee, but now I can put the rest of the money as the employer, all on the Roth side. I don't need a tax break right now. Again, I'm in the trucking business. I have plenty of tax breaks in the trucking business. So I'd rather take all my income that I'm making from the real estate business and put it in my Roth and save later on for retirement. So again, family, those are my top 3 accounts that I use to benefit me for retirement and later on in life. Again, I know a lot of people are just barely paying the bills, but you have to make a sacrifice as an entrepreneur to make sure you pay yourself first. And so later on in life, you'll have some retirement. So, all right, family, I appreciate everybody watching. I hope I touched base. I didn't go in deep detail on these 3 accounts, but hopefully it helps you out as an entrepreneur that you will look into these accounts and see if any of these accounts can help you out and benefit you at the same time. So I use Fidelity, I use Vanguard, and I use Charles Schwab as 3 of my retirement accounts and investments that I invest in my future. So, all right, family, I appreciate everybody watching. Please subscribe, leave some comments. I do read every comment, and I promise to reply back. And again, I'm trying to do a video once a week. Thank you, everybody, and have a great weekend.